Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, 1 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM portfolio number 4 returning 0.38% down to up to CBAM 5 V2 returning 1.11% on the one-week basis. I think we're beginning to see quite a bit of evidence coming out of earnings season and a bit of a bear market rally, not necessarily out in the clear yet for markets, and that's reflected in the top performance from Allianz European Continental Equities alongside JP US Equity Income performance north of 3.47% on the one-week basis. We also did see a bit of rebound there in the sort of safe haven asset gold as investors really showed their distrust for this bear market rally, and that would see that 3.8% advance from gold there on the one-week basis. Switching over to detractors performance over the past week, one of the main focus for the markets has been the Chinese Congress, Chinese People's Congress, and that would see that Chinese positions in our equity parts of emerging markets have been better performers, with Columbia Threadneedle, Bailey Guilford European, and the HSBC China down more than 9% on the week on the back of Xi Jinping, Chinese Premier, just consolidating power there, and some concerns around how much of an autocracy the Chinese country would be going forward. We also saw a bit of a rebound there on the back of UK assets, on the back of scrapping that Trustonomics fiscal package, which involved quite a couple of unfunded programs and tax cuts, and that would see gilts up 3.24% on Monday as Rishi Sunak was confirmed as a new UK Prime Minister. On a quarter-to-date basis, all 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from minus 0.7335% rather for CBAM portfolio number 1 up to 0.59% for CBAM 5 V2 on a relatively risk-on quarter to date, and just reflecting again that effect of earnings season really coming into play with the S&P 500, Allianz European Continental, and JP Morgan US Equity up more than 3.58% on the quarter-to-date basis. And again, looking at this earnings season, analyst expectations have been a bit lower coming into it, and I think that has given a lot of companies the opportunity to surprise on the upside in terms of earnings. In terms of detractors to performance, you continue to see that weakness there from China, but then again, in the medium to long term, we continue to support the longer term sort of growth story, circular growth story for the Chinese economy there, and also the valuations at this juncture being down more than 17% for Columbia Threadneedle on a quarter-to-date basis, continue to make China look attractive, and also we'll be looking over the next couple of months and quarters to begin to see if we get any evidence of that lifting of the zero-tolerance COVID lockdown policy, as China is obviously one of the overweights for our CBAM portfolios, and a position that we continue to review on an ongoing basis.